Good morning, everyone. We will start with monthly recommendations. First, we have Bank of Baroda. It is the third largest public sector bank in the country. So, last 2-3 meetings, we've been speaking of interest rate cuts, cash reserve ratio cuts by the government. One important thing we need to notice, especially when it comes to banks, when an interest rate comes, they will be giving out loans at a cheaper rate quickly, but they can't cut the deposit rates quickly. So because of this, there will be a little squeeze in the margin. Suppose you are taking a loan for average 12% and your deposit you are getting 8%. All of a sudden the rate cut comes. They may reduce the deposit, the loan rate by 9%, but because your deposit has a 1-year lock-in period, they will not be able to change the rates quickly. So for this quarter and next quarter, banks may not give that much great numbers, but this effect will change from the second half. So quarter 3 and quarter 4 will be very good for the banks. So this is not the case for NBFCs. This is only when it comes to banks. So last quarter again, all the public sector banks gave very good numbers. And looking at private banks, public sector banks are at a little better valuation. Even Bank of Baroda, if you look right now, it's at a PE of 6. So very good time to accumulate. But again, we will expect a turnaround only in the after the second half. And next we have Nippon Asset Management. Its parent company is Nippon Life Insurance Japan. They mainly manage mutual funds. They are also the third largest. The first is SBI Mutual Funds. It is not publicly listed. Second is HDFC, and they are the third. Mainly they are in the mutual funds, different types of mutual funds, and also they are also into asset management. But core revenue is still mutual funds. And again, this year we are seeing record high SIPs. And last quarter, most of the asset management companies gave their best numbers. And this stock actually they hit their all-time high yesterday. So you can just look at the market and then make a decision regarding buying it. But we are positive about the coming quarter results. And again, by the way, quarter 1 results have already started coming. So that is one more thing we'll have to look for. Right now, only few companies have come, only TCS. Only few Tata companies and only Aditya Birla has come. From next week, all the core companies will start coming. And next we have Dalmia Bharat. It is the cement manufacturer, fourth largest actually. See, cement companies again, cement being a very competitive industry, last year was not very good for cement companies in general. Also, this is mainly because the government capital expenditure and even private capital expenditure last year was poor. Also last year there was election, so because of that the government was little shy in spending. So this year we are expecting a little turnaround in this, and we are expecting cement companies to do well. Dalmia is mostly focused in South India. Their core operations are in South India. And compared to the competitors, they have a little cost advantage because around 35% of their energy consumption is from renewables, their own renewables. So little cost advantage they have. And we are expecting a turnaround. Even when it comes to capex, they have done well, but again, cement is a very extremely competitive. So again, we are waiting for the results. And next we have GNFC. It is a it's a government-owned chemical company. We don't have any company-specific news as such. In general, we are seeing recovery in the chemical industry. Prices are recovering, companies are able to price their products better because dumping from China has reduced over last 1 year. The company is mainly into fertilizers and other chemicals as well. And again, with good monsoon expected in north, we can expect some good orders coming in this quarter. So this should reflect in quarter 1 and quarter 2's results. And again, PE is very cheap, around 13 PE. That is one of the reasons for our recommendation. And finally, we have Precision Wires. This is we also gave a conviction idea for Precision Wires. Last year, they had a top line revenue growth of around 20%. Even if you look at their balance sheet last 3-4 years, it's very strong. The management is very experienced. They are into copper winding wires. Copper winding wires are mainly used in original equipment manufacturing. So most of their clients are from automobile industries, consumer durables and other industrial transformers and other industrial sectors. And talking about precision wires, one important thing is, see, when it comes to copper prices, they are very volatile. See, when they get an order, they will only buy the copper then. So the contract is fixed for them. So because of that, even despite copper price volatility, it will not affect them that much compared to others. So this is one advantage that the company has. And we are expecting a very good year for precision wires also. Again, PE is 32, which is very good for them. One more important news is they are also setting up a recycle plant in copper recycle plant in Gujarat. So that should commence this year. And coming to last month's review, Nifty gave a return of 1%. Our recommendations gave a return of 4%. Jubilant has achieved targets. Others are all in the same range. LIC yesterday it went down. No particular news for any. Pharma actually did most pharma stocks did pretty well last week. Apart from that, no specific news for either of the companies. And we have three new fund offerings. First is Nippon India MNCs. MNCs are companies that have a strong base in India but have operations abroad also. So mainly they are focused on investing in companies in all large cap companies like Adani, large FMCG companies, Infosys, Airtel. And next is Sundaram Multifactor. Multifactor is a very broad-based term. It could be anything. Maybe it could be a valuation factor, or it could be some momentum factor that the fund accordingly the fund decides. So it's a very general term, but again they will evaluate the market, and according to the factors set by them, they will invest. And last is Franklin's India Multi-Asset Allocation Fund. It is for conservative investors. It is a good opportunity because they invest in equity, debt, and even gold. So to reduce the market volatility, such funds are good. Okay, thank you.